Hello everybody, I hope you're all doing well. Welcome back to a new video. Luke here from Zeus Capital as always. Now in this video I'm going to be talking about liquidity. Now before I jump onto that, I just wanted to say that there are different variations when it comes to liquidity. Now this video is dedicated to smart money concepts liquidity, but I am aware of market illiquidity and liquidity. So just to cover that, so pretty much like, market liquidity just refers to the ease with which an asset or security can be converted into ready cash without affecting its market price. So to put things in, short, the amount of supply and demand in the markets refers to market liquidity, okay? But in this video, I'm going to be jumping into smart money concepts, liquidity, and the variation that way, okay? So I applied this to my trade and I find it very beneficial. I always look for some sort of sweep before looking at entries. So I thought I'd share with you guys because it's something that will definitely elevate your trading if the information is taken correctly. So make sure you get your notepad out if necessary and write down some notes. Or if you even have something like Notion, make sure you're ready to type away because there are going to be some information here that you do want to remember. You can always come back to this video and make sure you share it with your friends as well. So with that being said, guys, let's jump into it. So what is liquidity? Well, that's obviously the main question, right? So I have some notes on here as well. So if you can see my mouse on here, it should go off now, sorry. So there are some notes on here, so I'll just quickly cover them, but I do have something I do want to say on it. So liquidity just refers to market orders or fuel, okay? So in order for a car to move, it will need topping up with fuel, right? Same applies for the markets. In order for the markets to move, it will need to seek liquidity. Now, I relate my trading to the real life examples as much as possible. For those of you that know me, or have known me for quite a while now, you will know that I always refer real life to the markets, okay? And what I mean by that is, say for example, when I explain, let's say, give me a concept, okay, premium discount, okay? So when I talk about premium discount, I relate that to real life, okay? So for example, you go into your local store, you see something on a discounted item, you want to buy it, right? If you see something that's in a premium, but what I'm just saying is expensive, you're going to try and want to stay away from it, right? That's the way I view markets. I just, in terms of real life examples, I just try to apply it to real life because I feel like that's a great way to understand it for me personally, and also I think that's the way it should be understood. So a lot of my course online on my website is based around applying it to real life in markets just to help you get a better understanding, okay? So as you can see, in order for a car to move, it will need topping up with fuel. Same applies for the markets. In order for the markets to move, it will need to seek liquidity. So you can look at liquidity in terms of where is the vast majority of the stop losses resting. Well, we can look at common areas of where people may be entering, and I'll show you that on the next slide when I go on liquidity examples. But for every sell order, before I jump onto that, I just wanted to mention this. For every sell order, there must be an equivalent buy order for a trade to take place, and for every buy order, there must be an equivalent sell order, okay? Price seeks liquidity pools to rebalance the market, and a synonym. So what I'm saying by synonym is pretty much, you've probably been on Instagram before, you probably see dollar signs, especially on my charts, and you're wondering what the hell are these dollar signs, what the hell are these pound signs, or whatever currency signs there are, whether it's on my post or someone else's. And pretty much you may even see the word LQ, and again it just refers to liquidity. So now you have a better understanding already. So where are the majority of the people entering the markets? You got to be asking yourself this constantly, okay? Because obviously we don't want to be entering where the majority of people are entering, because that's just liquidity, right? So we can look at trading support and resistance zones or double tops, and I'll jump onto the examples now actually, so just help you get a better understanding of things. So as you can see, here's some examples of liquidity. So before I move on to that, I just want to say, note this down. There will be liquidity behind every structural swing point, okay? Now, trading support resistance zones, so like range, double tops, double bottoms, equal points, swing points, higher highs, higher lows, whatever, trend lines. So obviously prices moving bullish, people draw a trend line, look to buy on the third touch, sell on the third touch if in a bearish market, okay? So these are very popular ways to enter, to be entering the markets. So you got to ask yourself, where will their stop losses be resting? Well, it's obviously going to be below or above, depending on obviously what it is. So for example, if we take a look at this range here, right, you can see here, if people are going to enter, buying off this resistance level, where would their stop losses be? Well, it's going to be above, okay? And same for buying. same over here, the same everywhere. Okay, now don't get me wrong, I'm not trying to shit on any concepts that people use, you know, support and resistance, because they do work. You know, I used to trade based on fundamental data alongside break and retest. You know, there's obviously special techniques I use to enter the markets, but that was going back years ago now. Okay, and it worked for me. I was a profitable guy. So yeah, you know, smart money concepts obviously, in my opinion, is better. If I, you know, were to choose between the two, I would choose this way of trading. Why? Because it offers, you know, not only big, you know, returns that are potentially in the markets. Obviously, you know, there's this false misconceptions. There's this huge misconception about, you know, smart money concepts and huge trades. And sometimes, you know, I don't always look for those huge trades. I'm happy with a 3R, 5R. You know, I'm being pragmatic about everything. But yeah, you know, I'm not trying to shit on any concepts. Just I want to make that clear. I do think it's very important to have a decent understanding of all of this, anyways. You know, because it's one of the first few things you learn, especially support and resistance and trend lines. It's the first things, you know, sort of learn, you know, when you take your beginner's sort of journey. So don't worry, I'm not trying to say it's not working, because obviously it does. You know, it just depends on how you apply it. Then, you know, it may work for you, it may not work for the guy down the road. Okay, everybody's different. There's no two traders that are the exact same, so just remember that. So when it comes to liquidity, I'll explain it a bit more in depth now. I'll explain it a bit more in depth. I'll keep this slide on, so make sure you listen up, okay? So when it comes to liquidity, it's essentially just money, all right? It's the fuel for the market. It's just like gas is for a car, and a car without gas isn't going anywhere, as we know, okay? Anyways, moving on, as we can see here on the first example, is equal points. So we got equal highs and equal lows. Okay, so when it comes to trading these, we're often taught to sell at double tops and buy at double bottoms. Yeah, we may see a short-term, pullback or a short-term move. Don't get me wrong, but as we know, the markets like to target liquidity. So in the long run, these tops and bottoms will just fail to hold. Okay, we also have trendline liquidity to the far right, as you can see here, which is pretty much just, as you know, buy, sell on the third touch. You know, wait for breakouts, etc. And again, this, you know, just creates a bunch of liquidity waiting to be collected. Okay. Next up is range. As you can see, we've got support and resistance levels. So if price is ranging, it's essentially just gathering a bunch of liquidity waiting to be collected. And what are we taught to do? We're taught to buy from support, sell from resistance. And the last thing I wanted to mention here is now that, actually, I don't know if I'll mention this. Yeah, I think I'll throw this in here for you guys. So now with smart money is getting so popular, you're probably wondering, well, isn't order blocks acting as, you know, liquidity? You've heard about this whole thing as inducement, and inducement, all inducement it really is just inducing you into, for example, taking an early buy opportunity or an early sell. A lot of you who already trade smart money concepts based on order blocks will understand that when you buy off an order block, it sometimes won't go to plan, right? It will fail and then it'll go in that direction, and you're wondering, well, what did it tap into? Well, that's obviously the market's inducing you to enter the market earlier, okay? Because they're always going to be one step ahead. Just because we're called, you know, smart money concepts, even don't get me wrong, I'm going to just say this now, smart money concepts are still retail trading, okay? We're not in a big institution, we're not in a hedge fund, we're not trading on the trading floor, we're at home, the majority of us anyway, we're at home in an office, okay, or wherever your trading desk is. For me, I have this nice big room in my house, and this is my office, and I have everything in here, and this is my work done. Okay, I'm not sat on an institutional floor, so I'm not going to consider myself as any sort of, expert in trading, or any sort of, I guess you could say, like, institutional trader, because we are not institutional traders. Yes, we have a good understanding of how the markets work, and in terms of, okay, we see this huge shift in momentum, we understand why, we understand the orders and where they are being placed into the markets, okay, but that's a whole different story for another video. And I know a lot of traders probably get riled up watching this now. I'm thinking, oh, well, it is institutional trading, and at the end of the day, I get exactly where everyone is coming from, okay, but on the being pragmatic about the situation, again, you must understand where I'm coming from, okay? But moving on, so you may be thinking at this point, okay, Luke, you just mentioned about smart money becoming so popular, okay? So I'll carry on about that. So order blocks can act as a liquidity example, okay? So really, I should be adding liquidity order blocks in here, right? And I am. If you look at the swing points, for example, if you look here, oh, where is it now? Here. what would you do? You'd see if you break a structure, order block, right? And I'm not saying you can't trade from this one, because you can. But there's things that you look for. Obviously, I teach this mainly in my course and stuff, but I'll just give you guys a nice tip here now, for example. So make sure if you're going to be trading based off, this order block here, wait for a liquidity grab before, tapping into that. Because if there's no liquidity resting here, then this could act as liquidity for the next POI. Okay, so there needs to be some form of liquidity to be grabbed in order for the markets to move. This is my opinion, okay? Many people may disagree, many people may agree. But at the end of the day, like I said at the start, no two traders are the same, okay? So, like I said, for your information, I'm not saying trading any of these won't work, because it sure does, if traded correctly. So how can you benefit from liquidity? So, benefits of understanding liquidity and just in general is it will allow you to have less losses. Okay, it will also allow you to have positional entries because you understand where the markets are going. You're understanding why the markets are making higher highs and higher lows and why it's pulling back, and it's simply just because it's mitigating previous orders. Okay, you have a better understanding of the markets as well in depth. And like I said, for me as a trader, when you have a better understanding of the markets, it's essential, right? Because I like to apply it to real life, as I said. Okay, you also have better risk rewards. That's just that just correlates on the positional entries, I guess. But it does really allow you to have better risk rewards, 100%. It is quite consistent if you want to hit 1 to 5s on a 1 minute time frame, if assuming that you know what you do. Obviously, it's not for the easy. It's not easy. If it was easy, everyone would do it. But if you put time and effort into actually learning, and put the practice in, then that's going to make improvement every time. I don't believe in the theory practice makes improvement. I believe in the theory that practice makes improvement. Sorry, I don't believe in the theory that practice makes perfect. I believe in the theory practice makes improvement. Okay, nothing's perfect in life. No one's perfect in life, but through practice and repetition, we can improve every single time. Okay, and as traders as well, we also always want to be adapting to the markets, and we always want to be learning. We always want to stay hungry. We've got to be eager to learn more things. Even now, for example, me, I'm very satisfied in where I'm at in life. I'm going to keep on going. I want to keep going. I'm not just talking about in trading in general. I'm talking about in other things as well. For example, a lot of people are satisfied in making $1 million. And a lot of you people will agree. You'll always want more. Okay. But those are just a few examples. Sorry if I went a bit off topic there. But those are a few examples of just some benefits of understanding liquidity as a whole. So hopefully, through watching this video over and over, you can start to learn something, sort of gauge this information. This may be your edge that you're missing. Okay. So here's a trade example utilizing equal lows. So do not focus on the entries or POIs, just focus on understanding liquidity first, okay? Because that was, as you can see here, yes, it was a wick, but if you go down to the M5, there would be like a order block there as well. But as you can see, right, what happens is this is equal lows, okay? So this low, they're very equal, right? This as well, you could probably mark this up as like trendline liquidity as well. And as you can see, what I'm trying to get at is the liquidity is here, and this is where you want to be buying from if you understand order blocks. Now this is probably something I'll do a video 1, but like I said, if you want to get access to my course straight away, it teaches you everything that you need in order to become a consistently profitable trader. And that's not me lying about anything, that's just pure facts, right? If you only put in the work, and like I said as well, so let's go a bit off topic here again, but when you're going through the course, I will physically hold your hand through the course every step of the way. If you have any questions that you want to ask me, pop me a message in Discord. I reply as soon as I possibly can with a clear, in-depth description, with an answer, sorry. And if you're still not satisfied and you still don't quite get it, I'll keep going back and forth until you do. And if I have to do a video for you, that's fine. I don't mind doing a video, so the support's always there. But yeah, just understand here that, equal lows, there's some form of liquidity grab, and that's obviously what made that price tap into that POI. We can look for our entries. These are like 1 minute entries, or 5 second entries, whatever. But even if you set a risk entry here, so like a buy limit, it's still a nice winning trade target in the overall higher time frame highs. Okay, but yeah, you just got to understand where the liquidity is resting. Just bite the bullet, back test it as well. And now here's a trade example using trend line. As you can see, right? What do we have? We have one touch, we have two touch. This is the DXY as well. I'm sure you can probably go back and see this. I forgot what the other ones were, but I know this one is DXY because I actually just marked this up. Was it today and I've seen this? It's on the H1 or something like that. But here's a trade example utilizing trend line, okay? As you can see, you've got one touch, two touch. What are people going to be doing? They're going to be buying here, stops below here. And as you can see, huge wick to the downside, acquiring that liquidity. Okay, then obviously price moves in your initial direction. Now, a lot of you probably will relate to this. You probably look at this and think, okay, you know, that is something I would do. I'd probably buy from here, and as you can see, look what happened. Okay, and yeah, you know, just look at the move once the liquidity was acquired. Look at that move. Trade example utilizing range. So as you can see, classical support and resistance. People are going to be selling from the resistance. People are going to be buying from support. Okay, in this case, as you can see, makes more sense for people to be buying down here than it does here because these aren't relatively equal highs. But as this is more based on support, and as you can see, what happened? Price swept the upside, you know, creating that higher price. Is that okay? Potentially we're gonna, you know, break to the upside and continue bullish, whatever. Then as you can see, we had a nice move down into here, very aggressive, I know. And then what happened was price moved bullish, targeting those highs, boom. Okay. So you just got to train your eyes to spot all of this. Okay. Trade example utilizing swing points. So this here is a swing point. There was an order block within this wick. These wicks can act as zones, valid zones, right? And as you can see, price swept that and tapped into here. So this is what I'm on about when smart money is becoming popular, because it is, don't get me wrong. It doesn't necessarily mean it's a bad thing. It's a good thing if anything. But we always adapt as traders. And you know, for those people who actually can trade, they're always one step ahead. And as you can see, a lot of people would be buying here. They'll think, okay, break a structure to the upside. They probably even look to buy here as well, you know. So you just got to have an understanding of liquidity. Now, the reason why these zones are valid is something that I'll probably do a video on later on a different day. But obviously, like I said, it's taught in my course and things like that. But if you don't understand like these entry points and zones, I definitely recommend learning about it. I'm sure there probably are some information out there about it. Not that I recommend anyone personally. Just because I'm not trying to, you know, say that to be an idiot or anything. I just generally don't know people on YouTube. I'm pretty new to YouTube myself. So what do you notice? Do you notice how these zones get respected when there is some form of sweep? That's the answer you're going to be looking for. Okay, so if you can mark out your zones, identify your valid zones, look for liquidity sweep before you enter. If you notice like an equal high and it's just been wicked and the overall structure's to the downside, that's probability. As we know, trading is a game of probabilities. We're trying to stack the odds, if anything. Okay, so before you look at entries, wait for a sweep. As for time frames, this is up to you. I'm always going to be a fond believer of higher time frame always wins for everything. Why? Well, because you don't see the BFI sat in a 1 second chart. Yeah, you know, you only see the BFIs using the high time frames, right? 4 hour, daily, weekly, monthly, whatever. Okay, so as for time frames, that's completely subjective and up to you. For me personally, I'm okay with anything above the 15-minute looking at sweeps. 1 minute, if there's a 1 minute sweep, that's fine. But I don't really look at the, you know, liquidity sweeps on a 1 minute personally. Sometimes I do, sometimes I don't. I'm very adaptive. So yeah. I also quickly want to mention here as well, we do have a 0 to 100 roadmap. This is coming out in March, so this video is released on the 24th, I believe, of February. And during March, we have this 0 to 100 program coming out. We do have a current course, and you're probably thinking, oh, what's the difference? And really, there is no difference. It's just that the 0 to 100 is literally going to take you from 0, not knowing anything from trading, to 100 being funded or whatever your goals are. So it's going to be a nice journey, and we're going to have a time limit of completing it. As you can see, month 1 to 3, 4 to 6, 7 to 9. If you check out their website on the roadmap section, there will be explanations about these. So, for example, in month 1 to 3, this is the sort of the studying phase where you're starting to learn the concepts, starting to, you know, learn these new things. And then month 4 to 6, we're going to be looking to apply it to the real life and things like that. And it's going to be good. I haven't personally seen this before. I think it's going to be great to, I think it's going to absolutely change the industry. I think I'm really excited for it. So it's going to be nice to see where we're at in the next few months. It's going to be a great year for everyone in this Discord server or our community, and just anyone who's a part of a team. Everyone's going to be successful. We're all going to be laughing. So yeah, if you do have any questions, make sure you just pop me a message on Instagram or wherever. Just pop into my DMs and I'll answer you with any answers. But with that being said, guys, I really hope you've enjoyed this video. I really hope you gain value. I'm not expecting you guys to get it straight away. Some of you may, some of you may not. And it just comes down to your personal experience. But through time and repetition will come improvement, okay? So what I would recommend for you guys to do now is just jump on TradingView or whatever charting software you use. Go back in time. You don't have to use the replay tool just yet because you don't know what you're going to be back testing for. So just go back over the the charts for the previous day and whatever time frame, and try and look at where the equal points are, and then look to the right of it and what's happening. Okay, so just try and look at where the liquidity examples are. But with that being said, guys, I'm going to end the video here. Thank you so much for watching. Like I said, if you have any questions, just drop me a message. Make sure you get your free PDF. If you're interested in our courses, I highly recommend you check it out, guys. Thank you guys for watching. Catch you on the next one.